We are entering a super cycle of investments in core infrastructure assets. Core infrastructure assets are critical systems like utilities, transportation, communication networks, and data centers that support essential services. Their critical role in the functioning of society make them very resilient to market fluctuations. Today, infrastructure investments are entering a super cycle worth $200 trillion over the next 30 years. This massive area of opportunity is pushed by three global trends, called the 3Ds: digitalization, decarbonization, and deglobalization. First, let's take digitalization. With humanity doubling its data creation every 18 months, digital infrastructure is racing to keep up with the demand for new 5G towers, fiberglass networks, and data centers. This huge hardware upgrade is seen as a once-in-a-generation investment cycle. Next, we have decarbonization. The global push for net zero emissions by 2050 has created an immense need in renewable energy installations and subsequent investments. And finally, deglobalization. Between geopolitical shifts and supply chain disruptions, countries are bringing home strategic industries. Among all these opportunities, data centers are emerging as a particularly promising asset class. The need for data storage is growing exponentially, thanks to the explosion of AI and the mass migration to cloud-based services. In the US alone, data center power consumption is on track to 6x in the next 15 years. On top of very strong demand, infrastructure investments need private capital to fund an estimated $500 billion per year gap. This gap is expected to grow as public entities face increasing budget constraints and seek to offload critical infrastructure projects. This provides private investors an opportunity to acquire infrastructure assets at an attractive valuation. These assets also benefit from long-term contracts, providing stable returns in many market conditions. Historical performance analysis have shown that adding infrastructure assets can significantly increase overall returns while reducing risk. During the 10 worst quarters for equity markets since 2013, private infrastructure has outperformed equities and fixed income. For those who know where to look, infrastructure assets offer opportunities for significant returns, with a very low correlation to regular markets. To find out which infrastructure opportunities best suit your investor profile, contact Blue Lakes.